Hello, traders. Gary Wagner with the Gold Forecast here. It is April the 1st, Friday, approximately 11:30 a.m. in Honolulu, Hawaii. The markets have closed for the weekend. This is the daily report. We do have gold, which closed lower today, closing roughly $3 lower, $2.90 to be exact, at 1428.90, 1429.90, and that is the bid-ask spread. We are, of course, looking at a half-hour candlestick chart. And what we're witnessing here is we did have job numbers come out that were better than expected in the U.S. And as you can see, as this market traded, there was a vast sell-off when that report first surfaced. We found absolute support. We have talked about this all week at 1410. You can see this low right at around 1411. And then the market recouped through the end of the trading day, as I said, to close roughly $3 lower at 1428, 1429. Traders, I have a very interesting way that I want us to view this last week. I have put up a 360-minute candlestick chart. And what you can see in this candlestick chart is a couple of things. The first thing that we want to notice is that when we look at a week in review, last week Friday, that's the 25th. Just prior to that, we hit a new historical record all-time high. This is 1447. And this happened on the 24th and 23rd, meaning just before the week passed. This entire week has been very much, in terms of the pattern, a cup and saucer. There's our handle. There is the cup itself. In other words, what we saw the market doing this week, really more than anything, was recoup after having a heavy round of profit taking, which occurred after the market hit these highs. We have this tremendous amount of real strong support. This is that 1410. We also talked about during our daily report where we had this, in fact, triple bottom, and you can see that quite eloquently here. From there, we saw the market recoup, run back up, falling short, of course, of that 1448, but it did take out the 1431, which is another serious area, come down a little bit, and then begin to recoup towards the end of the week. Now, my sentiment is that each time this marketplace strives and makes a new high, obviously, we get a lot of profit taking coming into the market, but it is slowly working itself up to where now support is well above 1400. 2 months ago, I could not have made that statement. 3 months ago, I could not have made that statement. So when we look at this picture and we see, oh, each time the market comes and makes a new high, it fails, that is correct. It does come down from there. But let's look at the flip side of that, because every time this market makes a new high, most importantly, really importantly, is support moves up. And that's the critical factor here. As we look at this particular market moving, week by week, day by day, month by month, we get caught up in the microcosm and the subtle moves within gold when the big picture is support continually moves higher and gold makes higher highs. Can't hold them, can't sustain them. That will have to be a later date if that's what gold plans on doing. Now, in terms of our Elliott wave count, I believe that we're still absolutely 100% on track. Of course, we end our corrective phase. This is back at the end of January, beginning of February. This is when we hit that low of 1308 right in here. At that point, the market was off and running to the races. We had this huge impulse wave up, which took it to the first of a couple of record tops that we hit. You can see it here, here, and here. And that was what we're calling the end of wave one. Then we went into our corrective wave. This is wave two right in here. And now we have begun an impulse wave number three. My sentiment for that impulse wave, and in terms of the big picture, that impulse wave is simply up like this. But in terms of what we call the minor count. And the minor count is very critical because it gives us an idea of the ebbs and flows as this market moves up. It's never going to move straight up. What we're looking at here is, I believe, that we're going to have either a 3 or 5 count, a complex wave on this third wave. We've already gone wave, this is 1. I believe this is 2. We are currently in 3. If it is a 3-tiered wave, it will end there, or it will be a 5-tier wave, excuse me. Now, my belief is, in terms of forecast models, when we look at basic Elliott wave doctrine, we always use wave 1 as our benchmark. And that wave itself here, this was a $136 move from the bottom to the top. If we have an equivalent move, we will be well over $1,500 an ounce based upon that. And that's where my target of 1506 is coming from. My belief is that gold will trade, test, and break $1,500 an ounce. Traders, maintain your long position, maintain your stop. Over next week on Sunday and Monday, we're going to talk about adding to that position. But for right now, I think we have a good trade underway. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you on Sunday for another daily report. Bye-bye.
When I look out my window, many sights to see. And when I look in my window,